Scott, and I think I'm going to go ahead and get started. This is November 3rd. It is 2:18 p.m. in the afternoon, and as we can do a quick look, the futures are still showing Friday, so the market is truly not yet trading. Thank everybody for joining me today, and let's go ahead and get started. So first thing I'd like to do is start with a quick PowerPoint, as everybody knows. I always put titles on them, so today I put the title, Momentum Stocks Hit a Wall, but the market's moved higher. And you'll see what I mean by that. This was a tough week for growth stocks, and frankly, all momentum stocks. And no shocker, the markets have been very extended. Growth stocks have been extended, and the market slowed down this week. And the momentum stocks took it much harder than some of the larger stocks. And I'll show you some interesting data that shows about the importance of the market. My email addresses are there. I prefer the first one, but a lot of people know me by the second. The disclaimer, as usual, is for educational purposes only. Any recommendations are in the spirit of education and not to be considered investment advice. I'm a doctor, not a broker, and I joke about this, but it's true. Most physicians ultimately lose money in the market. And although I do this, and I'm obviously a homer for HGSI, I'm independent, and I paid for my own software, and everything that I use are things that I paid for. I like to think I'm without bias, but that's never true. I have a lot of programs on my desktop. I purposely hide my desktop. What I need are a real-time trading platform, and I use both TradeStation and Thinkorswim. I need something to analyze the stocks in the markets, especially after hours, and I prefer something that's not web-based but is on my computer for speed. I use HGSI as my main tool, as you will see. In addition, I use EdgeRater for some of the market timing benefits that it offers. ETF Bandits for applying some of the Connors techniques to ETFs, and I use Magenta Trader for seasonal analysis. I also am a big fan of Ian Woodward and Ron Brown and utilize a number of their tools and services. As Ian Woodward again said at this weekend's meeting, he's not a guru. His job is to teach you to be your own guru. I feel the same way, and I think you have to find people to influence you whose styles you trust and learn from them. I've learned from Ian and Ron, upper left corner here, Alexander Elder, William O'Neill, Morales and Katcher, the second book, Trading a Cockpit, somehow disappeared from here, excellent book. Dan Tharp for position size money management, Bigelow is my candlestick guru, David Elliott for a lot of my triggers. Here's some of the email addresses I use, or not emails, but websites that I use on a regular basis. I felt in many ways spoiled this past 10 days. I got to go to two great meetings. George Lea and I ran a meeting in Orange County, which I thought went extremely well, and look forward to repeating it again next year. And then I got to be an attendee and presenter at Ian and Ron's meeting in Palos Verdes this past weekend. I also had some really special treats. I got to socially go out to dinner with George Lea, Gil Morales, and then also I got invited to a dinner with John Bollinger. So got the chance not to just sit in a room and listen or speak, but also to meet and share meals with some very smart people. I always like to figure out where the market is. Now, this is an interesting time because last week, again, feels like we're stuck here in the shoulder over here wanting to roll over, but the markets didn't. In fact, they stayed pretty much fairly flat, so we're probably in this period of indecision, and we can break higher or we can break down from here. So I'm not telling you anything new, except we're now going into some pretty attractive seasonal times. So perhaps we'll see a year-end rally, which would be great. Obviously, I want to know what the market's doing because it's easy to go long, especially on pullbacks in an uptrend, to short in a downtrend, but it's hard to go opposite of the market. And here's your old Darvis box. Now, this call is predominantly about tops-down investing. And now I do both tops-down and bottoms-up, and you'll see those techniques as we go forward. So I just thought I'd put this here. Ian used these two slides at the recent weekend meeting. I think his numbers are too conservative, but you can see the influence of the market is nearly half, the group a third, and the stock the least important piece. So I want to identify the direction of the market. I want to identify what the strongest groups are. And then I want to buy the stocks that are in those strongest groups when the market tells me to go long. So why does tops down make a difference? Well, Ian has a saying that growth stocks, especially ones that we trade, go up like rockets and they fall like rocks. So this is an old slide, but one that's extremely timely. Imagine you have a room, and in that room you have 20, 30, 40 brilliant investors. And they meet on a monthly basis. And each month they pick a series of stocks to recommend to buy. And then they track their results over a period of time. And what you have here is very, I think, a very interesting and compelling story. And what you have here is that 20-day and 40-day performance are very much dependent upon the type of market. That these folks pick stocks that in a strong market went up nearly 100% in 20 days. Over 40 days' time, they were up 78% in a strong market. In a mixed strong or a mixed weak, you can see in a mixed strong market, they had less performance. But when you cross over to a weaker market, you start to see that even smart people that are very good at picking stocks have a challenge in picking successful stocks when the market is against you. So the message is, when the wind is at your back, you make more money and don't fight the wind. Upcoming meetings, well, the first two are done. I'll be speaking along with George Lea and a number of others at the Magenta Trader Advanced Workshop in Las Vegas, November 17th through 20th. This meeting leads right into the Las Vegas Trader Expo, so if you can spare the better part of a week, 4 days with the Magenta crew, and then you're on your own at the Traders Expo, but it's a great meeting, chance to meet some leaders, some great thinkers and leaders in the industry, and to play with some toys. www.magentatrader.com for more info on the Magenta workshop. Highgrowthstock.com, this is their website. On the website, you can also find some information, some free weekly reports and free trial software that does not require a credit card for your download and for your first 30 days of beta. So on that note, let's jump into the software and let's see if we can learn something. Let's start with a review of the markets. I'm going to open up Excel, and I'm going to open up my end of the week workbook. Added a couple things to this. So I want to always get a sense of what the market did. So one thing I like to do is as those who've been here before know that I accumulate a series of watch lists over the week. Some of them I make on the weekend from HGSI. Some I download from marketsmith.com on the weekend. Some I download daily from Investors Business Daily. Some I get from other services like Bespoke. So a number of different things that I might do to get lists of stocks. And then over the weekend, I do this thing called a group performance analysis to look at how those stocks performed over the week. I do them from end of day Friday to end of day Friday, and for the purists, I do it for opening of the day Monday to end of day Friday. So the first thing I noticed this week is the S&P 500 was pretty flat at 0.11. I think the Dow was up more than NASDAQ was down a little bit. And then I look at the number of stocks, the groups in black versus the groups in red. And the first thing that tells me is, boy, the market was weak, and most of the stocks that I look at are in red. Now, this is a static list, and I don't imply that I don't trade my stocks and manage my positions. But if I'd left my positions intact of what I had last Friday to this Friday, I would have been down 2%. That was the same as the group inclusion filter, which is usually a leader, the best of Woodward and Brown, sprinters, and the HGS 100. The IBD 50 fared better, but it was still down over 1%. The message here is pretty simple. In a bad market, and this was not a market's a market of stocks, and it's a basket of different investing styles. But in a bad market, it is, these stocks, the growth stocks, often do worse. So I don't need to really go through the Monday to Friday because it looks just as bad. So weak market for the type of stocks we trade, even though the S&P was kind of flat. I look at bucketology, and I see that 2/3 of the stocks in the S&P 1500 are trading above the midline of the Bollinger Bands. That's a positive, but it's not as bullish as it's been. And I see that the percentage of securities in the different buckets has started to move down. So that's good because a week ago we had a large amount sitting over here at above the upper band. And since 95% of the time stocks spend their day within the Bollinger Bands, when you start to get a lot of stocks above or below the bands, one can expect that you're going to see them go back into the bands and correct. I like to follow the Indices, and you could see, well, I can see, you trust me, that we still had no additional Hindenburg signals. That's great. A couple other things that I like to do is one of the things about HGSI is you can build custom indexes. And these custom indexes, you can then monitor and get an idea when the market rolls over. Since the type of stocks that I like to buy go up faster than the market and fall much faster than the market, when those stocks roll over, it's often a great signal that the market itself is going to correct. So we created an index at the last HGSI meeting of leaders, and to be part of this list, they had to start in the lower left of the chart and go to the upper right. We then created an index within HGSI, and what I'm looking for is to see evidence of this group correcting. And you could see that there's a good day on Monday, a gap up on Tuesday for this list, and then Wednesday, Thursday, and Friday, sort of a topping look to the list. I can't even say that. It's slowing down at the top, but certainly has not pulled back to any of the supports. It's above the 8, the 17, the 50, the 200, and we'll see if it can maintain. How do I use this list? Well, at the 17, I'm getting a little bit nervous. At the 50, I'm starting to raise cash. And if it breaks through the 50, I'm going to be out of most of my positions because when this rolls over, one would expect the market to correct. And you can think about, when we look at the market, all the corrections, the small corrections that we've seen over the last several months. And you can see that this list of leaders has pulled back several times to the 50-day moving average, but has never broken it. So as long as it stays above the 50 and certainly above the 17, I would consider that healthy. There's also an index that I put together of Ian's Canaries, not as healthy looking. You can see this one has pulled back to the 17, although it might be setting up at a place to bounce to new highs. So I use these to give me a sense of what the market is doing. Before I move forward, I just wanted to point this piece out here. As I mentioned, I use EdgeRater for market timing, and that's where I generated my bucketology and my Hindi lists. This may be the best of the best. where Chris White, the proprietor of EdgeRater, has incorporated a lot of George Lea's signals. Most of these, or many of these, come out of David Elliott's camp, and automates the process. So I was able to scan in about 20 seconds 4,000 stocks, find out which ones are in a squeeze, and then those that are in a squeeze, which ones have breakout signals, PS, parabolic support, and those PSRs. I guess, I don't know if it's support and resistance, but I think it's stop and reverse, but they basically give you buy and sell signals or support and resistance signals on a chart that people might use as buy and sell. Mobile breakouts, pocket pivots, and the channel breakouts. So this is now automated, so those that are looking for signals can, if they own EdgeRater, it really simplifies the process. Let's take a look at HGSI and get a sense of what the market is doing. Actually, before I do that, do a quick look at my TradeStation. Even though I like to go into TradeStation, I like to very quickly look at the indices in Elder. And I want to look for evidence of divergence and what the impulse indicator is showing. So what we see here is we've gone to a new high. We're not really getting a new high in the MACD. So there clearly is on the histogram some evidence of divergence. We've pulled back. We're within the envelope. And these are blue, which allows me to either hold or buy or sell. It's not pretty much a non-committal. We're at 72% of the high jump. Weekly and the monthly are green on the S&P. I want to take a look at the NASDAQ, which should have been weaker for the week. You can see it's pulled back in the channel here in between the upper and lower envelope. Higher highs. Yeah, I mean, certainly is a divergence going back to July, where it did not get a higher MACD histogram or line. Blue, blue, and green still on a, could be a buy signal if you want to be long. The blue might give me a little bit of caution, but doesn't tell me I have to get out of positions. Then if I look at the Dow up at the top of its envelope, green, green, blue here, but also a pretty obvious divergence where you took out the prior high here, but not on the MACD histogram. So, all of it looks the same to me. Pretty much blue bars, which tells me caution, but I don't have to reverse anything I'm doing. MACD divergences persisting, which might be bothersome. And now let's go into HGSI. So first thing I like to do is go down to the Woodward and Brown user groups, go into Major Markets Plus, put my top-down view, which gives me a purely price and volume and derivative-based technical ranking system, but gives me 2 or 3 weeks worth of information. And what it shows me is that over this period of time, the Dow and utilities and dollar led, and weakness was, unfortunately, in our types of stocks, the Russell 2000, small cap 600, gold, silver, gas, oil, and commodities were weak. And I guess that shouldn't be much of a surprise to see some weakness appearing in the major markets with the dollar being higher and also persisting the weakness in silver and in gold. All right. So let's take a look at some of my favorite indices to look at. We'll start with the Dow Jones Industrial Average. So just in case you've not been here before, here's my crazy charts. These are momentum indicators. The bongos on the top half, the force on the bottom, and some accumulation distribution. This is Ian's ATM machine, also known as the high jump bar. When indices or stocks get to the highest high, the highest stretch they are from their moving averages, they have a tendency to pull back. And so I'm always going to look at where this line is in relationship to prior times. I have red candle highs and green candle lows there as well. This mostly, in this case, all white areas are for Bible gap ups. This is DI plus and minus with the crossovers painted in green or red. On the gray here is a Bollinger Band. I have a 8-day exponential in purple, a 17-day in green, 50-day in blue, and a 200-day moving average in red. The magenta is a pocket pivot down. The light blue here is a pocket pivot up. On the first volume bar, these are all measurements of the market, including things like Eurekas, which are in green, which are exuberance in the market, and Phoenixes in red, which might give me some indication of a market that is weak. These are each calculated on the NYSE and are not going to be tied to what's in the charting window, unless, of course, what's in the charting window is the NYSE. On the bottom are the kahunas, which are percentage movement of the Bollinger Bands. Above 24, you get a light color. Above 40% within the Bollinger Bands, the price change on a single day, you get a dark color. Reds for downs, blues for ups. So, Dow Jones Industrial, sort of lower left, upper right. Let's give it some more space or more data. Plus, wrong, minus. And you can see it's had a huge run up since the beginning of the year. It has pulled back to the 200 once. And that was our bigger correction. And just to get an idea of how big that correction was, I can put my up here on the high and bring it down to the low. And I can see I had about a 6.3% correction. That's the market that we've been in. It's been in a steady up after a correction of from mid-September to mid-November. This correction, let me just take a look at this, was, at least on the Dow, was down 8.6% in about 27 days. And from that correction to where we are today, the market is up 25%. And at the max, the market's been up a little bit higher, 26, 27%. So why would I do all that? Just to get a sense that this has been a very powerful move in the market. And, you know, it still looks intact, although one could argue that we're sort of at a triple top. It'll be interesting to see if we can break through here. Hard not to be bullish feeling going into this part of the year. We are getting heavy, as I said, at a triple top. If I look at the S&P, I don't want the 100, I want the 500. Try that again. S&P 500, I'm not going to spend much time here because the story is going to be exactly the same on each of these. Going out to new highs, small pullbacks, sitting on top of the 8-day exponential looks to me like it wants to go higher. The NASDAQ, which we know was the weakest of the bunch last week, with a pocket pivot down, whatever that means on Thursday. Russell 2000 below the 17-day moving average, but also a huge run up. And then we could look at the dollar. Now I've been, this and the VIX, every time they try to make a move up, they get smacked down. It's at the 50 with the pocket pivot at a kahuna day before, DI crossover, turning green in the momentum indicators. Maybe the dollar makes its run from here. It's just had a hard time getting above the 50 and then staying above the 200. So we'll see, but that looks a little bit bullish for the dollar right now, which means gold and silver are going to struggle at the 50, as you could see, failed to stay above the 50 on gold and silver as well. You know, a lot of people are talking about bottoms in the metals and wanting to be buying and accumulating them, and it may turn out to be a good time, but certainly I don't think the market has given us a signal of that. All right, once I've looked at the market, I want to go look at indexes, or excuse me, industries, and we have 145 industry groups, and if I go to the force index up, I can see that 41 of them are positive and I could see that only 9 of them are negative. So more evidence of a positive market, but in a strong market, we usually see 70, 80, or even more of the industry groups are positive. Let's take a look at what we can see. The leading group is internet retail. Take a look at these real quick. What I like to do is look at each of these. So it'll be the same chart view, but I'm going to change it by putting my earnings and revenue back. Expedia, hard for me to get too excited here. The stock has been sort of in chop. It did have a kahuna and a big volume day on Friday. Must have been earnings got above the 200. I guess this could be a good place to be nibbling on it if 200 holds as support. I don't like the earnings per share growth, so I would have skipped it. Facebook, I've been saying to be long. It pulled back to the 50 on Thursday, which would have been an awesome time to get long. Didn't do much on Friday. I still think this is a stock you hold on to. And it had a pretty big reversal day on Thursday. Traded down low. I guess we call that a belt hold day, and finished up for the day. And then again, didn't do much negative or positive on Friday. Netflix earnings are out, which was this crazy day here where they traded up to the stars and then they traded down. The lower left, upper right, if you take out that day, it's actually pretty tight. And it's really interesting to sense and see how Netflix runs. But when you look at its earnings, as much as I'd like to say it's too expensive and move on, certainly it's not without risk. If it ever stubs its earnings, it's dead. But it's got $4 projected in 2014 with growth of over 100%. I suspect there's going to be people on the street giving it a price target of $400. Nutrisystems, it's actually not a bad-looking chart. I don't love the company. It was in a long-term downtrend. You can see below the 200. It broke above, the 50 broke above the 200 back in July. Now it's had a nice move from 10 up to almost 20. Had good earnings come out. Everything's green on the momentum indicators. But the next 2 quarters don't look so hot. I probably would skip it. And Fab Universal, there's 2 little Chinese companies, FU and Vision, VISN. Both have very quick run-ups and snapbacks down. And they both look like they're bouncing. But they both have to be considered very high risk. And you don't put your life savings in there, but if you have a little speculative account, it might be the kind of thing that you might want to nibble on. All right, that's group 1. Group 2, computer hardware. Now, I don't understand why Hewlett-Packard's up at the top, so I might, on the chart, right-click and go to more info from the web and go to, say, FinViz and watch it open up FinViz, and it'll go right to Hewlett-Packard. And I might spin down here. Yeah, I have no idea why HP it looks so strong. If somebody showed me that chart and it didn't say HP, I'd be very intrigued and interested. Sort of a pretty deep cup formation. And all of a sudden on the right side here, you have a couple pocket pivots, a kahuna, big volume coming in, everything is green. So from a technical perspective, it looks very viable. I just don't get it. Maybe with Dell going private, the feeling is there'll be consolidation and less competition. You can see it's been in a horrible downtrend for months, years, and it's got some big resistance lines that 200-day support at about 31. But 25 to 31 is still $6. So it's not for me, but somebody must like it. And it doesn't look bad on either the weekly or the daily chart. 3D Systems has been a big leader of late. Very choppy up chart, but it's going up, lower left, upper right. Earnings were bad, and it traded down. and then it closed the day up on big volume, which is a very bullish sign as people look towards their future. Stratasys has, I don't know if I would call it less earnings, more erratic earnings, but also lower left, upper right. Actually, chart looks pretty good, out at all-time highs, but I don't like the earnings per share growth, as you can see here, which is kind of negligible. Cable and satellite index. These have been on a roar, and several of them made my buy list. This is Time Warner Cable, breaking out to all-time high, or at least high on the chart. 2.1% dividend, multiple of about 20. Growth rate doesn't look that exciting for me going forward. Did have two pocket pivots this week and a Bible gap up on Thursday on increased volume. Comcast, beautiful, lower left, upper right. Looks like it wants to break out, also like Time Warner at recent year highs. Charter had pulled back. This is one that I think gets manipulated around because of potential acquisition candidates, although it's got great earnings per share growth. Cablevision, this one is pulled back hard, had a pocket pivot and a kahuna on Friday. This would be an interesting one if it can get above its 50, which is at 17. But I think with that 250-day above it, it's going to probably struggle to get there on their first attempt. But you can see some really nice-looking charts in cable and satellite. Next group is airlines. And these have really changed because these used to be bad investments. And now I think airlines, for the most part, have become investment vehicles. This is United Continental Holdings, ultimately a turnaround play with the consolidation of Continental. I think this delta are really tied to whether or not U.S. Air and American can get, I guess they're in mediation now, and get approval of their merger. My sense is their merger will happen, and now they're just negotiating with the Feds on what they have to give up, and that way the Feds can avoid what might have been an ugly court battle. Delta, to me, is the leader of the group, lower left, upper right. It's in our LLUR list as well. Pocket pivot. Now, is that an exhaustion pocket pivot because it's already had a big run? I don't think so. I think that this thing will continue to run, although it is getting long in the tooth, and pullbacks to the 50, as you can see, have occurred the entire way up, and maybe it's getting close to one of those coming in now. And here's U.S. Airways rallying this week on suggestions that the Fed may loosen some of their restrictions and allow them to merge with American Airlines. Steel, lots of good-looking steel stories out there, all beaten down, really bottom-fishing approaches. I'm playing Cleveland Cliffs. Why am I playing Cleveland Cliffs? Looking for a turnaround story here. This is a China play on the ore perspective as well. And something else I like about Cleveland Cliffs is I like buying stocks that are not overly extended, although by high jump it's starting to look extended, but I think that when you've had a stock that's been in a downtrend and switched, I have to go look at the calculation better. But had a Bible gap up about a week ago. You have 817, 50 crossing the 200, so you have a fair amount of support right underneath it. If steel continues to do well, you can see the group index here. Great volume on Friday. This might be one to play it with. U.S. Steel's had a pretty big run for U.S. Steel. It's going to have some intermittent bad earnings reports, but in 2 quarters it's looking for a big win. Let's look at the weekly chart, and you can see it's got $36 is where it's got its 200-day or 200 weekly, but it looks pretty good as well. Valley is basically the old Rio. This is Cliff in Brazil, another big iron ore producer, as well as other mining based in Rio de Janeiro. That gives you a play on the international side as well as the China play. Two got above the 200. One nice thing about this 200-day moving average is it has a tendency to act as support once you can stay above it. And if you set your stops a little bit below the 200, each time here where it failed, you would have been stopped out. So I like that because it gives me a great sense of where to set my stops. And I can play this run at modest to little risk. Steel Dynamics also looks interesting. Looks like a growth stock. Good earnings per share growth. Pocket pivot on Thursday, pays a small dividend. The next group down, and I'm looking at my phone, so we're at about 35 minutes here, is industrial conglomerates. So that'll be GE leading the way. It's the only one above the index. So let's look very quickly at this. And GE actually looks pretty darn good. It's up at the top of its high jump. It's got earnings that are somewhat spotty. A pocket pivot on Friday, and it pays a dividend of about 2.9%. Not the most exciting looking picture that I've seen, but if you're a big GE fan, it made the list. Pharmaceutical index. Point out my favorite here is Valiant. Like DDD, it's funny, I think it was, they had earnings that were not great. And you could see that they traded all the way down on their earnings day. It's hard to see there, I apologize. On their earnings miss, which was Thursday. And then Friday comes and they have a kahuna and a big up day and took out the close on Wednesday before the earnings came out. To me, a pullback to the 50 and a move like that is a very bullish picture, and one that suggests to me that this stock wants to run still. It makes money. It's a drug company, and there was something in IBD that talked about how this would be one of their last bad quarters, and they blamed it on some patent expirations. And they've got a number of new products coming to market. They just closed a big acquisition of Bausch & Lomb. Others here that looked interesting. Santeris, I've loved for a long time. It just does not seem to be able to break out. And even though it's got great earnings per share growth, I've lost enthusiasm for it. I'll still be watching it, but a lot less exciting. Lanet is a smaller generics company that makes money. It's got some good earnings per share growth rate, and you can see it's in a nice little uptrend, all bite at the top. You're getting close on the high jump bar. Specialty stores, it's sort of a mixture. Don't really know what's going on here. But the office stores look great, and I think it's probably a similar story to the comments on HP, that there's some M&A going on in the space and perhaps eliminating some competition. Not big fans of them right now. Five Below is a retailer, actually a nice looking chart, consolidated for quite some time, had a Bible gap up, held at the 17-day. It looks like it wants to go again. Kahuna on Friday, all my momentum indicators are green. More office stores, so something's going on in the office store area. Here's Office Max, and here is Staples. I do suspect that some of this is related to M&A activity, as I previously mentioned. Aerospace and defense, a lot of good-looking aerospace stocks. I mean, this stock is just beautiful. I mean, it's expensive. It's probably too expensive for many of us. It's had a huge run. This is Boeing. You can see it scraping around the top of its high jump bar. Trades at a multiple of 20. And just out of curiosity, when I look, one of the things I like about MarketSmith, multiple 24, And you can see the earnings per share growth is slowing down going forward. But if it maintains a multiple of 20, that's a $150 stock. So it still probably has room, especially if it stays out of trouble with its 787s. Don't know much about Digital Globe, aerospace communications company. Pull back to the 200, just broke above the 50 with a couple of kahunas and a viable gap up. Based upon some of the Ian rules, multiple kahunas, a pocket pivot, viable gap up, probably something you want to watch, and perhaps if it takes out the prior highs, it might be something to consider. Earnings per share growth doesn't look very impressive. Spirit Auto Systems, I like this one even better. It does make money, trades at a multiple of, a high multiple of 114, but it's got good growth rate, pull back to the 50, running again, viable gap up on Friday, so follow the viable gap up rules for stops. Probably be a reasonable place to put some of your money. This made my buy list. Another defense stock, ITT Industries. What a beautiful, this is what's tight. Lower left, upper right, kahuna, a bunch of pocket pivots, great volume, and a viable gap up coming in this week. Another one that you might want to consider. So a lot of interesting things in this defense. I also like BEAV. Again, how tight do you want? Starting to get a little bit extended. Kind of looks like Boeing at a little bit less money with a little better growth rate. Next one to look at real quickly are drug retail. And Walgreens and CVS are doing well. Thankfully, so is Rite Aid. And you can see Walgreens, lower left, upper right, high jump bar at the top, starting to get extended at the top of its Bollinger Bands, but having a great move, as is CVS. Less interested in those. You see any other groups I wanted to look at? Broadcasting, several stocks made it to my list. You notice what's not here. There's no biotech. So biotech clearly has been weak. So from a top-down perspective, we've looked at a number of stocks that you may find interesting and attractive. What else can we do? I ran my group inclusion filter today. Most of you know that that's one of my favorite tests that I do. And what I found on my group inclusion filter, and we'll take a look through these very quickly, is that I ran against most of my groups. Now, granted, this group did horrible last week because the market did not perform, but these were the stocks, the top 30 stocks or so, that made it into the majority of my groups. So let's very quickly run through them. There was a question about how to archive weekly data in HGSI, so I'm going to show you that first. What I do is I go into all securities, let's say I want everything. So I'm going to go into scorecard, no index, because it gives me the most fundamentals. And you could set this up yourself and put whatever you want to store. So you put whatever data you want to keep. I'll take off the filter because I don't want to eliminate any stocks. And I should get about 8,000 stocks. And then all I do is I do a file, save as an HTML, and I do that every week. And when I do that on a weekly basis, I save a HTML workspace that includes, in a searchable format, all the stocks and their fundamentals. And then I keep that in case I want to do back testing or look at the way things looked at. One of the challenges with most computers is most programs, they do a great job of archiving price and volume data, but most don't bother to archive fundamentals. And HGSI is included in that comment. So I use that HTML save to keep that data so I can come back and study it at another time. So I'm now looking, and we're at about 46 minutes. I feel like I'm missing something. One of the things that I also like to do before I look at some charts is I have my own favorite views, and just to show you where it's at. In HGSI strategies, where we run top-down investing, archive, reference library, miscellaneous are the sprinters, and typically these overperform the market. And here are a number of stocks that you might want to be looking at. And you can get an idea of what groups are working too. You can see that biotech had some. There's Gilead, one of our favorites. Healthcare equipment, life sciences, a couple oil, gas, and exploration, personal products. But Sprinter one-step combo is it was originally formatted by David Ghilardi as a way of bringing some of the best moving stocks at a given point to the top. So if you don't want to look at 8,000 stocks, you can look at a smaller number of stocks to get an idea of what's currently working and what's not working. So put back on my favorite, which I don't know if it's my favorite, it's just what I'm used to using, the scorecard no index. And I'm going to go down to my group inclusion filter. This is what I dumped in from that GIF. So very quickly, that GIF, and all you do, and go to some of my earlier webcasts, is using the designer function. You can check off whatever user groups you want to search from, and then when you run the group inclusion filter, it identifies which stocks are most frequently found in the various groups. So the hypothesis being those that are in most of the groups are probably the better stocks. So 3D systems we already looked at, lower left, upper right. You know, it's expensive. Got earnings, at least coming up next quarter. It's in a very powerful group. Perhaps a change in the industry with 3D printing. Certainly a leader. Storm Ruger, you know, I have a hard time buying this stock, especially after what happened in LA. Sometimes after you get some gun stuff in the news, they pull back. On the other hand, sometimes they run because of fear that someone's going to take assault rifles and other weapons off the market. From a technical perspective, it broke out, pulled back, looks like it wants to run again. Had a couple kahunas that had some volume, a DI crossover. And Smith & Wesson looks similar. Here's Stratasys. We looked at this one earlier from the top-down approach, another 3D printer. Noah Holdings is a volatile, that's not tight, Chinese asset management company. Pull back to the 50. I think it wants to run again. I have a position in this one, but you got to have steel stomach because it has a tendency to correct pretty quickly. Lynette's that small generic company we already looked at. Five Below is a retailer we already looked at. Illumina, this is probably the leader in that the life sciences tools and services group. Now I have a hard time playing this one because every time it's facing, somebody comes up with news that Roche is going to buy them. A pocket pivot, long run up, looks like a great chart. Everything is green. Had a Bible gap up a few days ago. The earnings growth, I don't think supports some of the pricing. I think there's a lot of story into this stock, such as related to potential M&A activity. This is McKesson, one of the competitors of my old company, Cardinal. What a great move. McKesson is distribution plus great healthcare technology. They also have some practice management assets from buying U.S. Oncology. I've always admired this company. You know, they're extended. Had a Bible gap up on earnings. Everything is green. When you look at healthcare reform, there's a lot of folks who believe that the distributors who make a little bit of money on a lot of transactions will be the big winners, and that's Cardinal, AmerisourceBergen, and McKesson because of the expansion of the population of paying customers. Here's Nu Skin. What a great run. I don't know what to do with this guy. It's sort of one of these multi-level marketing companies in healthcare. If you just forget what it does, it's all green, big run up, getting extended. It's been a great story. Probably too expensive, but it keeps getting higher. Looked at BEAV, BE Aerospace, sort of looks like Boeing at a little bit less cost. Nice lower left, upper right move. Looked at Delta. So I'm going to take a quick comment here, and you notice that with my top-down investment approach, I am picking up the majority of these stocks in just those 10 groups. SSC Technologies, don't know much about this. It's got a lot of congestion in this area. It's got to get above this top here. But it pulled back hard on Friday and then closed up for the day with a pocket pivot. It's probably something that is worth looking at. And following, maybe it's something you might want to own. I don't know enough about it. It's got good earnings per share growth. Iconics Brands looks to me like it's in sort of a climax run where it broke out here. Well, I can't say that. It broke out after basing on Tuesday, don't know if it was earnings, and a DI crossover and a Bible gap up. It's not extended yet. Don't love the earnings per share, but it's one that you might want to watch. Certainly you had a nice base since the middle of July, and then now it takes off. Towers & Watson, HR company pulling back at a high, pocket pivot on Friday. Maybe it's, these are great stocks, a lot of interesting companies. This is my favorite generic house activist, the old Watson. A nice move up here, getting extended, but the nice thing is, sort of was a slow uptake, and you could see with the indices catch up, and therefore you get into a scenario where you're not near the top of the high jump. Qihu may be giving us another chance. This is a volatile Chinese internet safety and gaming company, pulling back to the 50, which normally to me is a great opportunity to buy. It makes money. DI crossover. On this one, I put in my list as a pullback waiting for a signal, in that this is a stock that was in an uptrend, went sideways, at a natural place to move up as it hits the major moving average. I'd like to see a kahuna or something coming in. Winnebago, you can tell I was looking at this one earlier today. This is in the automobile industry, although they make the big coaches, motor coaches. Family had one growing up. You have to like togetherness to have one. And you can almost say that it's had a big run up, sort of a flag formation here. Get a break above the flag, the pennant, maybe, might be one to watch. It's certainly been in a good uptrend. It makes money. SoFun is another Chinese internet story. And it, too, looks like it's at a place that might be an interesting buy point. DI crossover kahuna on Thursday. This one, like all the Chinese stocks, got pulled down with some of the issues related to NQ, Netquin, when there was discussions from Muddy Waters accusing them of fraud, which is a pretty bad thing. So I could do this all day long, but I want to go through the first 10 or 15. I think I have. We've looked at several of the others already. I'll just continue because time isn't too late. Mohawk Industry, carpet company, just broke out to a new high on a kahuna and a pocket pivot. Don't like how it closed near the low of the day, and we'll have to see which way it opens. But even though housing has been troubled, we saw good earnings from Trex. I think the earnings were okay from Sherwin-Williams as well, and USG, US Gypsum. So it may be that these are still possibilities, despite the fact that home building seems to be slowing down. Don't know much about A.O. Smith. They are a building products as well, so probably the same story goes in. Certainly looks like it's extended. It's been nice to find this guy on the 50-day moving average. Ambarella, I think it's a small network or semiconductor company, digital cameras, pulling back, not too excited at this point. WageWorks, here's one of these things I don't understand. Maybe this is a Salesforce wannabe. Makes money, but trades at a multiple of 100, close to 100, which is much more than its growth rate. Big run up, went sideways, let the moving averages catch up, and then had a gap up on Friday with a kahuna. Must not have made volume to be a Bible gap up, but looks like it wants to run. I just don't understand this stock based upon its multiple. Jazz is one of my favorite pharma stocks. It's getting long in the tooth. It makes money. Had a rough week pulling back, but might be getting to a place where it becomes a compelling investment. LifeLock is pull back to the 50. I've talked about that being a sign I like a lot, and had a move up on a kahuna on Friday. When I say I'm looking for a signal, this is what I'm looking for. I couldn't be more. This is perfect. Had a run up, went sideways, the moving average caught up, pull back to the 50, and the next day I have a Bible gap up, a kahuna on huge volume in. Now, I don't love the fundies here, but I love that pattern. And so when I look at some of these others, see if I can find one. Right, here's Wage, did the same thing. SoFund did the same thing. I showed you Valiant earlier. That's what I'm looking for. Really quickly, here's a couple of education companies. They ran up over the last week, pulling back, so I let them settle down. Grand Canyon Education, same story. See where that's going to go. Yandex, here's a Russian internet provider. Big run up, pulling back hard to that 50-day moving average. I'm going to be watching that. It's on a watch list. I'm looking for a trigger. I'm looking for something to come in like a kahuna, a pocket pivot, some substantial volume. Generic Holdings, they make the generators after the hurricanes. I'm sure they make other things too. So I've got a flag with a pennant. Right, we went from 42 up to 52, that's 10. I think we can get 10 points more, 7 to 10 points more, if at the point that it breaks above the pennant. But I wouldn't buy it until it breaks above the pennant. Here's Valiant, here's that story. Pull back to the 50, open up, have a kahuna, good volume, in, buy. That's what I like. Spirit, a little bit extended, a couple of red pocket pivots down, that would bother me. They had some interesting news. This is one of the airline stocks. I think Delta looks cleaner. MasterCard, you know, I've got some of these, some of my longer holding accounts. I got to write a note in my brain. Every time this stock pulls back to the 50 moving average, pinch my nose, ignore the market, and buy, because this thing loves to come back. It's extended now, wait till it comes back. American Railcars, Trinity, Greenbrier, and American Railcars all look similar. Pull back, they look like they want to run. Here's one with two kahunas, a couple of pocket pivots, good volume coming in. One to watch. There's a little bit of a wolf pack I mentioned. Here's one of the specialty stores, GNC Holdings, or nutrition centers, nice move up, makes money. So the point here is not which ones to buy and which ones to sell. The point is all you got to do is go into Designer, go into Tools, Group Inclusion Report, and you can start to check off whatever groups you're interested in, and it will identify the stocks that make it to most of those lists. And I think, as you can see here, I found a lot of meat stocks. On that note, I think I'm going to put my buy list up. So a lot of people ask me to do this. You buy things at your own risk. These are some of the stocks whose charts are things that I liked. I then divide these up into several categories. You can always pause it if you feel the need to write this down. And you just pull up. I break them into different categories. The Bible gap ups. I like some of the solars. First Solar had great earnings this week. Other solars that made it to my buy list this week. There were a bunch. Canadian Solar pulling back a little bit, but looks good. And I thought there was another solar. Jinx Solar is down here as well. And then even Sun Edison. So I thought solars looked compelling. Spirit Aerosystems is a defense play. Several BE Aerospace I liked. Here's that Greenbrier, had a Bible gap up. Pullbacks ready to run are those stocks that I'm looking for volume or kahunas or pocket pivots to come in. If you're looking for all the above and investment opportunity with a dividend, Lynn pays about a 7% dividend. A lot of stocks here to like, FAB, FU, like Vision are dangerous. The gambling stocks pulled back this week, might give a good opportunity to get MTEL. Michael Kors pulled back after it was announced that they're delaying the NYSE listing now, actually the Dow listing, no, actually S&P 500, let me get my listing correct. And if you read the subtype, it said because of another merger that's taken a little bit longer but still expected to close. So you know Kors is coming in. The indexes that had to keep it in their index funds unloaded it until that happens. So on that note, I think I'm going to say good night. I hope you all have a great week in the market, and I look forward to doing this again on a weekly basis. And I do appreciate the comments telling me that you guys like it or you hate it, so I know it's worth continuing. So you all have a great night, great week, be safe, and goodbye.